Hey guys, this video is going to be based on just my perspective on how this chapter, like the essentials for this chapter is going to be on, that you're going to really need to know when you do your assignments. And I'm also going to go over some of the procedures of what you need to record in your assignments, and then the basics of this PowerPoint. So now for chapter 10, purchases and cash payments, is basically dealing with you, the business, reselling items for your own profit. So you could be your own small retail shop selling, for the examples here in the book, it talks about Barbie dolls. Like you order items from a vendor, so it could be like from Disney's Toy Story manufacturers or Barbie dolls, Mattel's, and you're sending orders to them that are known as purchases. Now, with the purchase orders themselves are just a paper that you basically write what you want to order from the businesses or your vendors, and they basically send you the material and then bill you later for it. Now this is essentially what purchases is where you order merchandise or items from a vendor, which it could be anybody. It could be Michael Kors, the toys from Mattel, anything. It could be any items that you're willing to resell in your business. Now, purchases is known as a cost account, but in the simpler terms of not keeping it just as a cost account, you can identify it as an expense account because it's shows money leaving the business. Well, basically money that you're investing into your business to get those items into your business to resell, which are like the toys or the clothing, whichever you're doing. It'll have a debit increase balance, like an expense, to show you're basically recording the amount of money that you've invested in your toys or items that you're going to resell. But I won't tell you the reason why it's labeled as a cost account is because it's not considered an asset, but it's not also considered an expense. It's kind of in the middle of the two. And what I mean by that is that an asset is basically something that's valuable to your business that you can use to keep it going, which is what you're doing with the retail business. And the expense part about it is that you're basically investing money that you're going to try and get back into your business to resell and gain a profit from that. Now, the best example that the book gives you is that it talks about Barbie dolls. It talks about the $4,000 worth of Barbie dolls on account from Mattel Manufacturing in July 6th. Now, instead of just looking at the picture the picture on the PowerPoint itself, I'm actually going to do a demonstration for this. So it'll bring this up real quick. So it's purchase merchandise on account. So what you're going to do is just have the date, whichever date it is. Today is July 9th. And now your purchases are going to, let me fix this real quick. You're going to record the amount that you purchased or you ordered with your purchase order, which is going to be purchases with whatever amount. For this amount, it's going to be $4,000. $4,000. Of course, it's going to do this. Now, if you've all been getting this error like this, you can just highlight all of this however far it needs to be, and you're going to go under number and change it to text. Text will show whatever you put in it. So now, oh, I'm sorry, shoot. I'm sorry. This is an error. No, it's not an error on me. No, I'm good. Yes. So going back to the purchase on account, is that showing purchases, the amount that you ordered from a vendor. In this case, it's going to be Mattel. So you're going to show that debit increase, or that kind of like an asset where you're showing the increase of that amount that you're going to resell to your customers. And since it's on account, you're going to put it under accounts payable for that specific vendor. Now, the one thing is that you're always going to have to learn about from this point on, is that for anything with accounts payable, you're going to have that thing that's known as a subsidiary ledger, which you learned last chapter in chapter 9. But in this case, it's going to be dealing with you owing money to vendors instead of your customers owing you money. There's going to be $4,000 here for accounts payable, and then you just leave an explanation for purchased or even ordered, just so you know that it's on account. Like you didn't use money to get these Barbie dolls in. Ordered from Mattel. If I can spell. And now there's also two main accounts that are going to be going against purchases. Now, another thing I need to add with purchases is that purchases is showing money that you owe to somebody. Now, the two accounts that are going to be showing, that are going to be basically beneficial to you, in a sense, is going to be purchase returns and allowance. And now, what is purchase returns and allowance? Purchase returns and allowance is basically showing an account on which you returned the items that you ordered from a business, from a vendor, because they were defective. Now, the best example that they give for here is that, well, I'm going to give an example for that, is that you ordered all your Barbie dolls, right? You got 3 boxes of Barbie dolls. You open up all the boxes up and you notice that one of the boxes has all the dolls missing all their heads. You can't resell any headless dolls. So what you have to do is you have to show a return of that order. And let's say you did it the next day. You're going to then first put the debit of accounts payable, because initially you had to record that accounts payable because you owed it. But now, since you know that this number, that a certain amount, in this case is going to be for $500, the $500 amount was defective, you have to return it. And now this would be known as a credit memorandum, not a debit memorandum. That's an error on this part here. Instead of credit memorandum, it would be a debit memorandum, because you're going to be issuing a debit memo to the vendor to show that you sent me defective items, and I'm going to show that I don't owe you that amount, whatever the amount value is for the defective material. Allowances. And the contra cost accounts to purchases will be known have a normal balance of a credit, meaning the credit side will increase. Debit memo to Mattel. Now again, dealing with the word contra cost, I'm going to zoom this in for you. The contra cost deals with that account being counteractive to the other account. In this case, it's going to be counteractive to purchases. Now, purchases is what you invested in items to resell to somebody. Now, this account, purchase returns, basically fights against whatever number you initially had in there. In our case, it's $4,000 that we first initially invested in, and we found out there's $500 worth of Barbie dolls that we cannot sell. So we have to send that back to the vendor in order for it to later on show that we don't owe that amount anymore. Now, what do I mean by later on down the road is that as you go and record these into your ledgers, it'll show through there as it goes. You're not going to see it all right away, like for this class. You're not going to see it happen right away like that. It's not like QuickBooks, where QuickBooks does it for you in a snap. For here, it's going to be showing, even though you record it on the next day on your journals, it'll come it'll come later on in the ends of the periods. And that even brings me to the point of what Dr. Collins wanted me to talk to y'all about, was the periodic method. Now, the periodic method is going to be shown on some of those assignments, but don't get freaked out by it, because the periodic method is basically telling you the recordings or the analysis of what you have after every certain period you had in your accounting. So you've been doing the periodic period this whole time, where after every month you sit down, you look at your adjusted trial balance, you look at your worksheet, and you get your trial balance and you look through all your inventory, do all your adjustments, get your numbers fixated, and see how much you sold, how much you made, and how much you've increased for that month. That is the periodic method. So don't worry about seeing that within your assignments. Now, the one thing is, for your chapters, for all your chapter review, your review concepts, is going to be talking about the perpetual method. The perpetual method is not necessarily the same as the periodic method, because the perpetual method will be continuously resupplying a certain account. So the one account that's going to be a perpetual method is going to be the only account that this chapter talks about, which is purchases. Because purchases, you're always going to want to have your clothing in stock if you're going to be doing retail for clothing or for toys. It doesn't matter, whatever it is. If you're doing merchandising, you're going to have that perpetual method of always having resupplying after a certain amount. So if we have $4,000, if we have 4,000 Barbie dolls, we could then say that we will then restock or reorder when we hit 1,000 or maybe 500 Barbie dolls in our inventory. Like, that's how much we have left. So then you would have a resupply before the month ends, or when the month ends. It'll just continually be restocked from your vendor as it goes along. And now let's see what else is next. Yes, the next contra cost account is going to be purchase discount. And now purchase discount deals with basically a discount for you that your vendor gives to you. So like last chapter, we talked about accounts receivable terms, where you, the business, were giving your customers a certain negotiation period, like not a negotiation period, more like a time period, where if they paid you within a certain amount of time, you would give a percentage off of what they had to pay you. And now it's the same thing for this. An example for a term that I'll just give to you right here is going to be like a term method of 5% for 10 days, and then you get like 30 days to pay off the whole thing if you don't make it by this date. So how can I take this? The example in one of your assignments gives us a percentage of 7% right here. Now if I do 7% on the amount that we have left that we're going to pay off, this is just an example for y'all, is that if we do the remainder of here just do the remainder of this from this, because we returned this amount, $500, out of this 4,000. So we only have $3,500 remaining to pay off. So in order to show that payment, you have to first show accounts payable for whichever vendor you have. In this case, it's going to be Mattel. And you're going to decrease it by $3,500. And then you would then break it down to your purchase discounts and your cash. Because since we're paying before the 10 days of when we initially bought it, they can honor us with that discount. That Mattel's honoring their negotiation of giving us that discount. So if we take 7% of 3,500, 3,500 times 7%. It'll be $245. So $245 is what we don't have to pay to Mattel, and then the remainder will just go in to your cash, because that's what you're actually having to pay. 245, which is $332.55. Now, this is the way you would show that purchase discount for yourself. Like, you're paying off your vendor what you owe to a vendor, which is that total $3,500 that because you don't owe them anymore now. But since we're paying within the first 10 days, they give us that percentage off, a 7%. So then you would then record that purchase discount, purchase discount of whatever amount. In this case is $245, and then crediting cash because we're showing that we're paying off our debts for that case. And then it's going to be no, not sold, paid Mattel. And that's basically it, because your purchase returns and your purchase discount go against the amount that you're going to have for owing anything. Now let's see. Now the other thing is about freight. Now there's two different types of freights. Where freight on board, FOB, freight on board shipping point, is where the buyer, like the customer, in this case it's going to be us, the small business buying from vendors, we pay for the shipping price and for the amount of value for the cost for the materials that we're buying, whether it's Barbie dolls or clothing. So then we have to have that. We then have the ownership of it because we paid for everything up front. So it's ours now for everything. Whereas for freight on board destination is where the vendor is the one that covers the shipping. And the only difference between freight on board destination and shipping point is that the ownership and the responsibility of the items coming to you. So for freight on board destination, if Mattel is sending me the Barbie dolls from wherever they're coming from, maybe New York, coming down here to Harlingen, they would have the legal title or the legal responsibilities for those items coming to me in one piece. So if there was anything problematic that we then discover when the items get to us, we have to then immediately call, and then they would take full responsibility of the damages that are happening. Whereas for freight on board shipping point is where we take the ownership of it because we paid for the shipping, and we're responsible for anything that happens to it. So if there's any damages that happen when the UPS or FedEx guy brings it over to us, we then have to then dispute what happened to that box, whether it was from the driver themselves delivering it to us, or it was just careless work from the FedEx or the freighter, and that would just have to be disputed with the freighter, not with the vendor, because you as the buyer paid for the shipping. So that's one of the major things Dr. Claus wanted me to go over with y'all. And let's see. I'll just keep going with the examples now. So now another thing is about your assignments is that you need to be very careful in reading this small paragraph in the beginning of your assignments, because it's giving you initial balances that were from the last pay period, from the last accounting period. So for example, here Anderson Company has $1,200 in the subsidiary ledgers. So if I go ahead and bring this to the side and bring up my other spreadsheet, I have to come into here, my my accounts payable ledger, notice that Anderson Company, I'm just go ahead and do this full screen so y'all can see it better. Anderson Company has $1,200 worth of accounts payable that we still owe to them for this chapter, guys. Remember that we owe these people money. Accounts payable, we owe them. So Anderson Company, I believe the date here initially, whatever the date is, let's see the dates, for March. So in this case it's going to be March 1st, and then we'll just put balance. You can even put rollover balance, whatever you feel is comfortable. For the explanation, you would put the balance in there for the explanation. And then we're going to place in the initial amount that we owe to these companies. And now you have to put these in there, because if you don't, your numbers are going to be off, and you're not going to have the full credit that you thought you had when you finished everything. So you have to be sure you record all these accounts that they show you in here, so that you know that you're square, that you know everything's in balance. Understand? So you just keep on going. March balance, if I can spell, for $400, I believe, for Henderson. Yes. And then squash is going to be 900. So 400 here, and then squash 900. So March 1st, and balance $900 and $900. Now, one thing to let y'all know about is if you want to know how to highlight your rows, is you're going to click these numbers. Click the first number, hold Control, and then just keep going until you feel satisfied. And then you're going to come over here to the fill bucket button, to the fill bucket icon, and then just highlight whatever color you want. In case that helps y'all with keeping your numbers right and not transitioning them to the wrong areas. And now one thing to let y'all note, one note about, is that accounts payable here on the page is $3,800 in total. That one's going to be recorded under the ledger for accounts payable. Like, this will be the initial rollover number here, March 1st, balance for that $3,800. Now, to test yourself out to see if the book is really not lying to you, is if you take this number, $3,800, keep that in mind, and then you look at all your subsidiary ledgers for each individual person. These numbers here, $1,200, $400, $900 for squash, and then for Zosa, I think was for $1,300. If you add up all these numbers from your individual accounts here, these should balance out. These numbers here should balance out to the same number of $3,800 here in accounts payable. That's one way to check to see if you're doing the things correctly in your accounts. Now, the one thing is that we've also noticed is that some people had errors on trying to identify the sales tax. Now, they don't show you the sales tax here, but one thing to note about sales tax is that you have to record the full amount of what okay, let me switch this back to this chapter. Like, some of the students have problems on how to record and where to record the amounts for purchase, for the discounts, and for the returns. Like, for the amount for when they paid it, you had some errors for that. So the one way to show the actual amount of this transaction right here, of having it be properly recorded without it being wrong is, I'm going to show you that right now, because some of y'all kind of got confused on that. So the recording of this, of the payment of what you owed, is going to be initially debiting accounts payable, your accounts payable accounts. So in this case, it's going to be for here. And remember that these numbers that these recordings that I have here are just the examples. Like, this is just an example. You know what? I'm gonna go ahead and do an example out of 10A3, just so it helps y'all keep track of it. So if you look at the first one here, paid half the amount owed to Henderson Company from previous purchases of computers on account, less a 7% purchase discount for check number 21. Now, what they mean from previous purchases is that these previous transactions that we had already initially put in, that you had to have in there beforehand. And now, let me go ahead and finish that real quick. I didn't put cash in. Cash is going to need to be put in as well. Let me go ahead and do that first before I record that other account. Cash was 22,000. 22,000. Now, for the 1st of March, going with the books, with your assignments, saying is that paying half the amount owed to Henderson Company, minus the 7% discount. So we have to come back and look at our subsidiary ledgers, see what we put for Henderson, and what we put for Henderson was $400. So half of 400 is 200. So for March 1st, you know what? Let me go ahead and get these out of the way here, just so you all don't get confused with it, because it's in the earlier part of the video either way. I can leave that there. Now for March 1st, you're going to pay half the amount owed to Henderson Company. So now in this chapter, we're dealing with accounts payable. So what we owe, or accounts payable, to Henderson Company is being paid. So you have to show that right there, accounts payable specifically for Henderson Company. And half the amount is going to be $200. Now in the case for it being the purchase discount, you're going to show the account purchase discount here, and then you're going to do the calculations for 7% of $200. So I cannot do that off the top of my head, so I'm going to do that with my calculator real quick. That's not right. 200 times 7%, $14. So we get $14 that we don't have to pay to Henderson Company. And then there's going to be a credit of cash because we're paying off our debts for the remainder. So it's going to be $186. Yes, $186. $186 for the actual payment of what we're going to physically pay to Henderson Company. And don't forget your explanation, paid half amount to Henderson Company. Now, to actually show this in your ledgers is you're going to just basically copy what you put here into your ledgers. So for the first account, it's going to be accounts payable. So we're going to go to the initial accounts payable right here. Go ahead and leave it as March 1st, but you're going to enter the new one. Paid half to Henderson Company. For our explanation, we're then going to decrease or credit $200 because that's what we had here. We debited $200 to accounts payable. And an explanation on to why is it $200 is because that's because that's the amount that we told them that we're going to do. We're paying off half the amount before the certain date. And now some people get confused on why it's $200. It's because you don't owe $200 to that company anymore. Like it is what it is. Like it's done. Like that is how much that's how much you told them that you're going to pay. But since they gave you that honors of giving a discount if you paid before the certain terms, which is for the example here, it's going to be 10 days, I believe. I don't think they give you one. Give you the example here. They don't give you the example for the terms, but my example for that would be a term of 7% within the initial 10 days if you pay that amount, and then you can just pay the whole thing. The end is the whole amount within the 30 days. That's a term. And now, since we're paying off $200, that's going to be what they have to decrease to show that, okay, we don't owe them $200 anymore, but they still honored us with that purchase discount. So we're paying within the first 10 days, and we have to record that $14 in purchase discount. So then we have to come here and look for purchase discount. In this case, it's going to be computer purchase discount. I'm going to go ahead and do some highlighting here, just so you can see it better. March 1st. You can put whatever you want. Paid half the amount to Henderson Company, and you're going to credit this because this is what counteracts or fights, in a sense, your purchases or what you owe to your vendors. So that's purchase discount. That's how you record it. Only the $14 credited, and now we have to show that actual amount that we actually paid to that vendor, which is going to be on the first. Paid half amount to Henderson, and then decreasing your $22,000 by that $186, because that's how much we actually paid off to Henderson. And now if I do my math right, I can't math in my head this big. 22,000 minus 186, $21,814. And that's basically how you record that payment of your debts. That's how you do it. That's basically Journal 1 for Assignment 1, 10A3. That's how you would do it. Now for the next one, let's see. Do they give a debit memorandum? They don't. Bought a computer merchandise. So let's go ahead and go up to. I'm gonna bring you up all the way up to the 18th. So let's start with the 3rd now. Bought a delivery truck for $8,000 cash. Check 22 payable to Singer Company. So now don't get confused with that payable to Bill Singer check company. If they tell you bought delivery truck for $8,000 cash, you should know that you're buying that delivery truck with your cash. So then you're going to come over here for the 3rd. What did you buy? You bought a delivery truck. So you know a delivery truck is an asset. So you're going to go, if you know your T accounts in your head already, you're going to show that as an increase of the amount, which is $8,000, or debit $8,000. And then it told you that you bought with cash, so you're going to credit cash with what you have for $8,000. And you have to always remember that your debits equals your credits. So going back to that first chapter and this first journal, you have to show that both your debits and credits will balance out, just like they did here. purchase truck, purchase truck with cash. And now the one thing I recommend y'all could probably do that'll help you get everything transferred correctly is that if you do a general journal and then record it in your ledgers as you go along. That could help you a lot easier. It might take a little longer because you're going back and forth for a long time, but it still can save you some headaches later on down the road for like just to minimize any errors with that. So then you can, I'm going to do that here, purchase truck, just to show you what it does. $8,000. So I did my credit first here. We recommend you all do your debits first and your credits second. So let me go ahead and do that debit first here. March 3rd. Purchase truck. And you're going to debit the $8,000 for that truck. And that's it. But always bring down your running balance. So 21,814 minus 8,000 brings you down to 13,814. Now for the next general journal is bought computer merchandise from lossless company, check number 223. So now another thing is when they give you a check number, that should tell you right off the bat that you're using your cash, because you'll never use checks to buy an account because you're using your money. You're taking money out of your bank account and using it. So for the 6th on general journal is you bought computer equipment. So we're going to go ahead and put computer equipment for the amount that it was valued at, and it was $2,500. So $2,500 debited because you're increasing that assets of computer equipment because you use your computers around your business, whatever it is for. I'm sorry, is that computer equipment? Sorry, computer merchandise. Computer merchandise. Computer merchandise. So in this case, you're selling merchandise. You're selling computers to people. So this could be computer parts, USBs, hard drives, memory disks, anything like that, any of that sort of nature. And then you purchased with cash. Now the one way I actually caught that error was because, for one, the assignment said computer merchandise, and then if you look into your ledgers, you'll notice that there's computer purchases and there's no such thing as computer equipment here. So the way I put computer equipment there, I would have known, okay, so then this is not going to be that asset of computer equipment. It's going to be that cost account of computer merchandise. Since this case it's not going to be on account, we won't have to worry about going back and forth and actually doing that payment. And now if I go back to this March 1st one, I forgot to do the other half of this recording. So I recorded it here in my initial accounts payable, but I didn't go and record it here into my Henderson, my specific subsidiary ledger for Henderson. So bad part on me. Paid half the amount. And then you're going to show a decrease for $200 here. So the $200 only left here for this customer, for this vendor. I'm sorry. Now for going back to that other one, for computer merchandise. So now computer merchandise, we bought $2,500 worth of that. computer. So we're going to go over here to computer merchandise. We're going to increase that because this is our amount that we're selling for the 6th. Purchased with cash. And increase $2,500. Correct? Yes. And then we're going to go ahead and decrease our cash by that same amount. So the 6th computer merch, and $2,500 decrease because we're crediting it or showing money leaving the cash account. 318 minus the $2,500, which is 11,314. So now let's go back. I'm gonna go back one more time over that one purchase, that first initial transaction that I forgot to do properly for y'all. I didn't complete it the right way, completely from front to back. So the initial way that you show the recording for the payment of your on account transactions is to show that initially you're going to come into your general accounts payable, record that amount in here of what you're going to pay to the vendor. You'll then come into the subsidiary ledger for that, record that in here to show that both for your general accounts payable and your specific accounts payable account that you're decreasing it by that amount because you're actually going to pay that amount. You then already know that you're going to have a discount, so now you're going to credit that amount to computer purchase discounts. You're going to record that in there, crediting that, and then crediting cash for that amount of what you're actually going to pay, which totals out that purchase discount and that cash payment to the same amount of $200. And you'll show that here. So that's the way you have to show that and what you're going to be doing for the rest of this chapter here for the week. Now, once you get finished recording everything inside the chapter, you're then going to come over to your AP, your accounts payable schedule. And now what you're going to do here is you're basically going to do the same thing that you did last week with accounts receivable, but you'll do it for what you owe as a business. Now let's see. Let me take a look here. Paid, bought additional computer equipment from the paste company. Code, direct expense. Okay. So what you would do for that amount, for basically whatever is left over at the end of every transaction is what you would record over in this area. So you would put Anderson, is that one of them even? Anderson, Henderson, so on and so forth, and then you would put their balances in here of what they owed you. So just as an example here, Anderson still owes us $1,200. So I think these are $1,200. Henderson owes us $200. And Squash still owes the $900. Squash. And then the final Zosa owes us $1,300. And that would basically be what you would do after you've completed all your general journal entries out of the book. Whatever's left should come over this way, and then when you do the totals out here, you're going to have a total out total, you'll have a total of what is still owed to your vendors. And now this number here should balance out to the same number that you have to accounts payable at the end here. So if I were to do that right now, it should still balance out because I haven't done anything else. So we have $3,600 that we still owe in general to everybody. So if I were to add this all up, it should turn out to be $3,600. So I do $1,200 plus $200 plus the $900 plus the $1,300 gives us that $3,600. So that could be a way of checking yourself as you go. But for the most part, you'll do the accounts payable schedule once it's ended. Once you finished all your general journals, to check to see if you did everything correctly in recording it from your journals to your ledgers. Now, if you follow what I showed y'all in the beginning of this video, you should be fine. As long as you follow what this procedures, you all should be just fine. And I think that is it for this chapter that I recommend for y'all, because I've already done a debit memo. They give you that for the second assignment, but that should be it. If you have any questions, feel free to email me. I'll leave my email right here on the top of this general journal. At my mail. Oops. Find that, be that way. Tutor email. And that should be it. If you have any questions, guys, just either talk to Dr. Claus, email me, and we'll see you in tutoring.